I think we've been lucky that at least from precipitation standpoint, it hasn't been that bad. But like, still, people are out there. People are out in the streets running, jogging. People are sitting outside eating because they don't have a choice. And I think that this in the future might be a really good thing for people to realize. I still live in Chicago, but I could be outside year round. Yeah, just be prepared for it. It sucks, but we were out. It was a beautiful day yesterday. So I don't know, man. I think I think you're right about the health thing. Um, it is a goal of mine this year to continue and improve on that, and I think it should be everybody's, mental and physical and financial, and that's a good segue for what we're going to talk about. Um,
Always good to
I
know
have
where you're
some,
at.
yeah, that's right. I have
Just be
written down some
realistic.
questions. Yeah.
Let's talk about questions.
Well, so I thought, well, before we had this conversation, it would be good to kind of approach it like as if I was interviewing somebody for work when I'm trying to get at a problem that needs solving from like a digital standpoint. And so usually that line of questioning starts with a very broad and then moves into the very specific.
Super cool.
Yeah. So what is the stock market? It would be my first question. If we're going to talk about financial, at least start talking about financial literacy or at least trading, what is the stock market?
15 years ago, the stock market to me was this thing that companies that I didn't understand had prices on, and wealthy people speculated.
Mm-hmm.
I didn't know the word speculated, but I just thought that it was kind of like betting on horses. And when people did well, they understood something about it and they did well and they could make a bunch of money quickly. I didn't really understand that there was a whole industry of saving within that. When people would say investing, I didn't really know that that wasn't like the Wall Street movie. I just
Mm-hmm.
And I think that most people were like that until they reached a certain place financially or in their career where they had money that either was invested or they were being told they should invest. In recent years, Robinhood has shown up, and I'm really oversimplifying, but Robinhood has shown up and it has made investing really, really accessible. That actually
Mm-hmm.
started with platforms that allowed people to trade remotely, like from a computer on these major stock exchanges. But it got to the American public in the form of applications and software where they could buy and sell themselves. Older people who were interested were early adopters in buying and selling shares of stock on websites, but that wasn't really something that my generation was doing and generations after us. Once the apps appeared, more and more people who had a little bit of money that they were already exchanging digitally, whether it was via PayPal, on eBay, or with Venmo or those sorts of programs with friends, and saw how easily they could put some money in there, people started getting interested. And what I came to find out was the stock market. What I came to find out was the stock market is a whole group of leagues. They're called exchanges, but and what they do is they carry the service of guaranteeing that a company is worthy or safe to be traded on a market, and then they provide the backing for the transactions between people who want to buy into pieces of companies and companies that want to offer ownership publicly.
Mm-hmm.
When a company chooses to do that, they're giving up a lot of power. So if a company starts small, say you had a company called Spiro Sketches that sold mugs that had sketches on them,
Mm-hmm.
and you sold $1 million worth of these mugs one year, and then you started a podcast where a guest got mugs and you guys drank coffee out of the mugs while you were talking, and all of a sudden that got really big, and then that started to get branded, and then you expanded, and the next thing you knew, you were $100 million company. You might you might start thinking, I am interested in offering this company to the public because the amount of cash flow generated through being on the stock market as well as doing normal business is astronomical.
Mm-hmm.
It's really like next level stuff. It's game
Mm-hmm.
changing for a business.
Mm-hmm.
It'll it allows the top level to get very wealthy, and or it allows a really ambitious company to all of a sudden have cash flow that allows them to do extremely ambitious things.
Mm-hmm.
Otherwise, before that, you had to budget, you had to worry about your overhead.
Mm-hmm.
And what happens quite often when a company gets on the stock market and becomes popular is they no longer have to worry about overflow for a while.
Mm-hmm.
It may
Because
come
of the
back,
investing.
yeah, it may come back to
Right.
haunt them. But for instance, like Tesla has been having this parabolic move where you just see its value shooting up day after day. And all of that's cash that the company more or less can use to
Mm-hmm.
expand any way they want.
Right.
And something like that, it's almost more cash than you can even do anything with. But
Mm-hmm.
shareholders, now here's the catch though, all of a sudden you have a board who's beholden to the shareholders, and the commitment that they have to make is that they will always strive to make more money
Mm-hmm.
in their decisions. So all of a sudden, a maverick entrepreneur who has always done things their own way now is this check and balance system. It's, whoa, that's a little crazy. That's not on brand.
Mm-hmm.
That's
Which is something that has happened with Elon Musk specifically, you know, and how he has
absolutely.
his antics. So, and I'm not calling them that, but other people have called them antics. Or of their concern was it was affecting the stock, and then they realized it wasn't. If anything, it was doing. I mean, it was affecting it positively.
And then all of a sudden they can dole out punishment for the guy running his
Mm-hmm.
company and having
Mm-hmm.
it be valuable. So
Mm-hmm.
that's the trade-off. But that's what's attractive to companies about getting on a stock market and
Mm-hmm.
or getting into the stock market on an exchange. And there
Mm-hmm.
are a couple different big exchanges in the United States. The two biggest being NASDAQ and the New York Stock Exchange. The New York Stock Exchange was literally on a street in New York, and people would go in there and they would exchange contracts for stock.
Mm-hmm.
The NASDAQ is all electronic. It really never had an origin of paper exchange.
Mm-hmm.
And NASDAQ built its success by being a little more aggressive as far as who it would allow to go public and offer
Mm-hmm.
shares on their exchange. And subsequently, they ended up getting companies like Tesla that have now made the NASDAQ's growth way more efficient and way faster than the New York Stock Exchanges. They're kind of outclassing them in recent
Mm-hmm.
years.
So you talked about something that I wanted to like, I guess the way that my brain works is so you talked about Robinhood and how it created a situation where there's the democratization of ability to invest, right? And
Yes, which has
then
now changed the
I'm
stock market.
right. And if you look at, and this is just my layman's interpretation of it, if you look at the way that people invest in a stock, it is a sense, it is a sense, it is a type of democracy as well, right? It is a type of we're investing in the system, or we're investing in something to create more cash flow with the understanding that there's checks and balances that
Yes,
benefit everybody.
yes,
So it's like a microcosm of opportunity, or a macrocosm, I should say, of opportunity. Because, like, dude, think about it. You have the ability with a little bit of money. For example, I've recently started using Robinhood based on your recommendations of certain things too, and just my own research. You don't have to buy an entire stock. That's like, I think, one misconception. So I'm having this conversation with you operating under some preconceived notions of a 1980s reality of what the stock market was from like movies like Wall Street, and also from hearing horror stories of like family friends who have lost a lot of money making bad investments. I mean, there is risk, right? There's risk to everything, but you can buy a fraction of something and still make money off of that, and you don't have to have a ton of capital to begin. That's the one thing that I think has been very liberating about considering things like Coinbase or things like Robinhood, for example. You know, you don't need millions in order to start.
Yeah, so all any individual company gets a valuation, and they kind of decide what the stock should cost, at least initially.
Mm-hmm.
And then when it gets offered on the stock market, the investors, people who buy it, as the stock goes up, that's the price they're willing to pay.
Mm-hmm.
And once those contracts are gone, what's left are more expensive ones.
Mm-hmm.
Stock goes up and up and up. So the market kind of determines how much something costs.
Mm-hmm.
And you want it to work that way, because if you find a company early on that you believe is going to do really well, then that means you can get paid for having that insight.
Mm-hmm.
That's also where a lot of people lose money, is they put a lot of money into a company that isn't really proven, or they put all of their money, instead of just, purchasing partial shares, into companies that feel like a sure thing but are very expensive
Mm-hmm.
per share, which means that they're not really getting a lot of say if they only own a couple of shares also,
Right. Right.
at least philosophically. But and then something bad happens and there's disaster. What people can also do, and is very easy now, with these these vehicles that act like stocks, but they're called ETFs.
Mm-hmm.
And they're electronic funds that are sold with the same tickers, just like any stock. Just right next to Apple is something, for example, called the QQQ.
Mm-hmm.
And what it is it's a fund that is the top 100 NASDAQ stocks at any time. And so by using those types of vehicles that weren't available pre-internet
Mm-hmm.
and pre-software that made it easy to trade from anywhere remotely,
Mm-hmm.
you can remove a lot of risk of buying one stock for the same price that a stock costs. For
Mm-hmm.
instance, like um, ARC is a company who offers several different funds that focus on innovation. And they've gotten famous for doubling the value of their main fund very quickly in like a year, this last year,
Mm-hmm.
which has been heavy into Tesla
Mm-hmm.
and Square. And their main fund costs like $160 a share at this point, I think. But they also have a fund that focuses on financial technology,
Mm-hmm.
and it's like $50 a share,
Mm-hmm.
which $50 a share I think might be, well, they're, I want to say Intel, but it might be $150 a share. It's neither here nor there. It's that's not a whole lot of money,
Mm-hmm.
and you're getting multiple stocks, so you're getting less risk
Mm-hmm.
for the exact same price as one stock. At the same time, one stock, if a company does really well, people will want to be shareholders. And so that stock can grow much quicker than a
Mm-hmm.
fund that has multiple within it.
Well, why? Okay. I mean, look, this is, I guess, what I want to know is why the fuck should I invest? Like, why should anybody do it to begin with? What, like, if you were to distill like the simplicity, once you get into the, and it's not minutia, once you get into the understanding of how it works, that's especially if you've made the plunge, right? It's like I've made the decision to invest, so now I have to learn about it. But what happens if you haven't even made that decision? I think a lot of people, especially now, like thinking about their money, I think more so than ever, considering the current crisis, like why should people invest? You always hear it's like something that like your grandmother or grandfather or like your parents did, right? And I think that financial literacy in our generation is something that is, it's not taught in high school. Like, why isn't this was never taught to me in high school, the way that the stock market works? Maybe it should have been. Like, I think some
It's
people
a
think
trap. They
that,
don't want you to know how it really works.
yeah, and I think that it's even worse than that. I think that there is some sort of like perception that being involved in a capitalist system makes you inherently a greedy or a bad person. And I think that that is such a, I don't know, that's such a short-sighted and naive outlook, you know. And I've been a victim of it in the past, of like being like, okay, what is capitalism bad? And that's not the conversation I'm trying to have. But I'm just saying, like, there are, like you said, there's traps and systems in place, it seems to me at least, that prevent people from really understanding how to be financially literate. And I feel like I'm at a deficit personally, and that's what I'm trying to educate
The
myself with
big
by talking to
trap,
you.
the big trap is the finance industry has built a business around convincing you that you can't make much money, but
Hmm.
you must try to make all you can. And they've
Hmm.
convinced you that making like 4% returns on your money annually, so $4 on $100 at the end of a year, is an acceptable return. And for a generation, for instance, many people who uh, worked in like the 50s and 60s benefited from a need for American manufacturing,
Hmm.
as an example. And so they were able to be paid really inflated wages for the amount of skill it took to do what their jobs were, because there was so much demand.
Hmm.
And they were able to save. And so making 4% on your money, I guess, is neat if you just have money being saved. But our generation doesn't have, we work way harder per
Hmm.
dollar than
Hmm.
those previous generations. So, and we
With
don't
more
have,
expensive
with more expense,
lifestyle.
right?
Yeah.
Because of,
Yeah.
the value of the dollar, the worth
Right.
of the dollar goes down over time.
Hmm.
And if you have so much money that you don't care that the value of your money is going to go down over time, you don't need any more cash flow, then maybe it's a waste of time. But the reality is that you can make more money than that in the stock market, and there are varying um, levels of risk you can take. But the reason that they taught you that is so that financial institutions can move in and say, we'll handle your money for you, and then charge you fees
Hmm.
for that perceived service, when all they're really doing is mimicking the behavior of, as an example, an index.
Hmm.
An index, which is a listing of essentially an exchange, or a list of companies on an exchange. The ETFs are quite often indexes. Also, people can invest just in the total stock market, or just in NASDAQ, that kind of thing. And but people don't really realize that there's a whole industry built around funneling them into needing to go to these investment companies that don't really beat the market, and then they charge fees on it, and they basically tax it, and that's just how they extract their money every year, because they know that over time the economy is going to grow. So they know that
Hmm.
every year they'll be able to do the same thing, except with your crash or cycle every decade or so. And
Hmm.
so it wasn't very interesting to us when we were oh great, we can make 4% on our money if we leave it in for 20 years. It might be something, I'm not gonna, I've got bills to pay.
Right.
But what they're not told is they can make more money than that. And what gets missed is that so many people want more money, and we're always taught to look for alternative, or what is it, extra, different sources of cash flow, whatever the
Hmm.
term is for that.
Diversified.
Diversified cash flow.
Hmm.
Get a part-time job or a side hustle or whatever. So
Right.
that's how you can get ahead. And in stocks, finance, equity, investing, instead of having to come up with some idea that you'll convince people to give you money for, you can just
Hmm.
go straight to the money.
Hmm.
And you don't have to invest in America. You can invest in international stocks. You can bet against America. You can
Hmm.
do a lot of different things. But whatever you're doing, you're going straight to the money. So
Hmm.
it's the most efficient. if you have a little money in your pocket, that means you can have a seat at the table. It's the most
Mm-hmm.
efficient way to go after getting extra money. And that's
Mm-hmm.
why most people should be interested in it, because most people could use extra money. And there's
Mm-hmm.
probably a place for you somewhere in investing or trading.
Well, okay. So then my next question to you is, okay, what about this assumption? And I don't know if it is an assumption. I was having a conversation with my old man the other day about it. What about this guess that the fucking thing is just going to keep on going up and up, like always? And like you said, there are these things called corrections, right, which happen out of necessity. But there is an assumption that it's always going to be in an upward trajectory. And
Then
is that
then you
true? I
then
mean,
you have some pretty big balls to not be in the market. Not
I,
you, but
yeah,
someone.
no, I know what you're saying, but like,
Yeah.
is that true though? I mean, at what point? At what
I don't
point is?
I think that that's mathematically impossible, but
Hmm.
right now the market is full of failing companies, and that doesn't matter because of the massive success of a few.
Hmm.
And that is mathematically sustainable. Over
Hmm.
time, those failing companies will, the ones that are really failing will go away.
Hmm.
And we may not have a need for larger. So, for instance, like if the top 100 companies in NASDAQ completely outperform the rest of that exchange, and you
Hmm.
can invest in the NASDAQ 100, then over time, the smart money will all end up in the NASDAQ 100. And then the
Hmm.
rest of the NASDAQ will kind of get left behind because the money that goes, just straight into those indexes won't be going into the exchange.
Hmm.
And they'll they'll disappear. So in theory, the thing can keep growing. And ultimately, as long as America is a world power, the American market will keep growing. It just might have some down years.
Hmm.
But I think the idea that nothing bad will ever happen again is that's a pretty extreme way to think.
Hmm. Well, then, I think security, physical, financial, whatever it is, I think it's what's like top of mind for everybody right now. People are scared because of political stuff. People are scared because of environmental, physical. Would you say that financial security is probably the great equalizer, like that defends against some of the other stuff? I mean, obviously, there's a saying that not all, most rich people aren't actually happy, and if happiness should be the goal, but I believe that money really helps to make you feel safe.
I know some happy
You know,
rich people.
yeah, you know, I mean, and so do I, and I think it's like it's not necessarily about your happiness in this like utopian like la di da way. It's about security, and it sounds like investing is at least in some way a universally accessible way to get more security, but just people don't know that that's the case.
Right. It really is universally acceptable or accessible now because of these apps that allow you to get
Hmm.
an account with $50
Hmm.
and then you're just there.
Hmm.
And even that money will grow over time. I'm I'm new to all of this as far as doing it for decades and being taught by like generational wealth or something like that.
Hmm.
I messed up in the 2010 housing crisis,
Hmm.
but I know that it is during these crises that people who aren't wealthy, more people who weren't wealthy become wealthy than ever before.
Hmm.
Like this is the time when it happens.
Hmm.
And then at that point, once things calm down, that's when everybody's able to kind of maintain where they're at or their trajectory or their lead,
Hmm.
because you're gearing up for times of rapid growth. And that's what we've seen recently. It doesn't mean that there won't be an impending issue
Hmm.
in 2021. 2021's already off to a great start. But
Right.
but if you are like if you don't know what investing is, chances are that's because your parents weren't investing, or
Mm-hmm.
you know what I mean? Like you probably
Mm-hmm.
didn't have wealth to invest.
Mm-hmm.
And like you said, money can really help situations. So I think that because of how tedious always being on the verge of poverty can be, it
Mm-hmm.
makes you more susceptible often to trying to do short term things that give you pleasure,
Mm-hmm.
like basically spend your money on temporary stuff.
Mm-hmm.
And this is a time when people who really want to be in a different situation, if they allocate that money to like a 5, 10 year game, not a 20-year game, but
Mm-hmm.
if they kind of play like a short game, they can actually change their situation, and not and then probably feel less susceptible to, man, I just want to go out and have a fun night. You know what I mean?
Mm-hmm.
Not that you shouldn't go
Mm-hmm.
out and have fun nights, but
Right.
you know, and then you blow that $300 buying a
Mm-hmm.
lot of shots for your friends when you were
Right.
already blackout drunk, versus
Right.
you could have just put that. And but I think that that's like, I think that that's systemic. I don't think that that's really an individual's fault. But
Sure.
the more people who might be within that system that can kind of be like, oh, I could just really get this app, right?
Mm-hmm.
And I could really just put it in this thing and kind of start learning,
Mm-hmm.
right? And then if I get to where I actually want to pick a company or something, I can do that.
Mm-hmm.
Um, I think that that would show its reward sooner than later for folks,
Mm-hmm.
but I understand why they don't. And cryptocurrency obviously is kind of like the entry point for a lot of people also.
Right. So I have a few things to comment on. Basically, listening to it. So the first thing I would say is this idea of a 5 to 10 year plan. Even for me, and I think for a lot of people, being disciplined and thinking about it in let's say the long term, the short long term versus instant gratification is very hard. Considering the fact that it's nice to push, like you said, that pleasure button. It's nice to feel that comfort in the moment because you're not thinking about the consequences of it. There's a saying my recently departed grandmother used to say, is a Greek saying, and it loosely translates to, if you take care of all of your clothes, you'll be able to save half of them. And that was like a poverty, like, she grew up really impoverished. And that was like the whole thing about making sure that you take care of the things that you have for the future, because you'll still need those clothes. So take care of them, because there might be a point where you can't afford clothes, or you just always need to be thinking about the future in the in and realizing that patience is important. So my question is twofold. If you don't know where to start, where should you look, like from an educational standpoint? Because you clearly, like, even when I talk to you, there's a level of I don't want to use the word insecurity, but there's a knowledge gap, right, between what I know and what you know based on your experience. So, for somebody who's listening to this, or some of our friends that we talk to, like, where should someone start, like, educating themselves? And then two, how do they get a plan together to kind of accommodate this 5 to 10 year plan? Because those two things, I think, are some of the hardest things that preclude everybody, because people are scared to do the entry level work for anything, because that's the barrier of entry, right? And to your point, like Coinbase, Robinhood, they've reduced that barrier of entry considerably, but it's still there, right? So people are scared because they might not understand math, they might not understand the system. So where do they go for step one?
I'm self-taught, which is cool
Mm-hmm.
because
Yeah.
I can tell people, like, you can learn this stuff.
Right. That's why I
and
was asking, because I know you are.
and to start learning, two good resources are investing.com,
Mm-hmm.
which has funnels for like I don't want to say courses. It's not like you're going to school, but they'll, you know, the trading basics, part one, and
Mm-hmm.
it's very thorough and you can learn a lot. And when I started, and this is just like a shameless plug. This isn't a calculated answer, but I watched a lot of YouTube videos by these
Right.
guys called it was Tasty Trade at the time, and they
Mm-hmm.
offer a trading platform called Tastyworks now as well. But I watched a lot of their videos, and
Mm-hmm.
I had two professional traders give me a couple of options trading books.
Mm-hmm.
They were old books, but I would not recommend someone learning about investing start doing options.
Mm-hmm.
That's a different deal.
Right.
The action statement answer is that there are three different platforms that come to mind. Well, four, but three different platforms. One is called wealthfront.com. The other one's called
Mm-hmm.
Betterment. I think it's
Mm-hmm.
MINT, but it's like your betterment is the
Mm-hmm.
play on words. But Betterment and Vanguard. Vanguard being my favorite. And what these do is it's essentially automated investing. You open up an account, you go through a questionnaire that helps figure out what your risk tolerance is and what your
Mm-hmm.
goal is with the money. Do I not
Mm-hmm.
want to lose any money? Do I want to retire in 20 years? Do I want to be really aggressive? Do I want to be moderately aggressive? And then you just put money into it and it invests the portfolio for you.
Mm-hmm.
What's actually very nice about those, and we use Vanguard to do some of that. And I also actually do have a small Wealthfront account. But um, what's nice about those is they can make trades within the account that don't count as your trades. You just own shares of these portfolios. But
Mm-hmm.
when you're buying and selling stock at the end of the year, you have to pay some taxes on profits and stuff like that.
Right.
And if you're just
Right.
putting money into this account, then they can trade to maximize your gains. And these three that I just recommended offer very, very low fees. It's not like
Mm-hmm.
a service that's
Mm-hmm.
supposedly trying to beat the market. It's more transparent than that. And then they're able to do as many trades as they want, and you're not, from a tax standpoint or profit standpoint or loss, you're not
Mm-hmm.
really responsible for that.
Mm-hmm.
And they also do some stuff called tax loss harvesting that can actually help you on your taxes at the end of the year, depending on what
Mm-hmm.
happened with your portfolio. So if you
So
don't understand math or anything, you can just go to wealthfront.com and put a little money in there whenever you can,
mm-hmm.
and it asks you in just regular real world terms how you want to grow this money, and then it'll just do it. And in the
Mm-hmm.
meantime, you can read and watch tutorials. Investing.com is a great place to start. Um,
Mm-hmm.
if somebody wants to get like an audio book, there's the Tony Robbins book called Money is a
Mm-hmm.
really good breakdown of like the overview. And there are a bunch of them. You can go on Audible. That I don't think that one's better. I just know it's really good. Um,
Mm-hmm.
you got some help from like Ray Dalio and the guy
Mm-hmm.
and Vogel who started Vanguard and stuff, and it's got a bunch of different like the first half of the book teaches you all about what the stock market and that kind of stuff is, and then the second half gives you like examples of how people would buy stock or buy ETFs that know what
Mm-hmm.
they're doing. Um, but those are good places to start. I think that, and one thing that one of my teachers was really big on was engagement is
Mm-hmm.
really turns the lights on. And if you think back to when you were playing college sports
Mm-hmm.
or doing like martial arts competitions, when it was game time, that's kind of when you actually saw how much your practice, your training
Mm-hmm.
had helped.
Mm-hmm.
And so a lot of people say I'm going to start learning something, and then they just keep learning and they keep learning and they keep learning, and they keep
Mm-hmm.
making the mental fallacy of thinking, well, I'll just learn a little more and then I'll be ready. But you're never
Right.
ready. So
Mm-hmm.
if you actually want to make money in the stock market, I think the best thing to do is put some money in the stock market.
And
And
test your theories or test your and
you
learn.
don't even need
Yeah.
theories, right?
Yeah.
Like you could just put some money in Wealthfront, and
Mm-hmm.
then as you learn, you could take that money out of some money, maybe your profits out of Wealthfront, and put them in
Right.
Robinhood, and buy some
Right.
stocks. Or you might at that point want to use like a more traditional broker, like Charles Schwab has no fees, um, TD Ameritrade and their software Thinkorswim has no fees now, free
Mm-hmm.
trading, just like Robinhood. Robinhood changed the industry
Mm-hmm.
in terms of making it cheap. When I started trading, I had to pay $7.95 per trade.
Wow.
And if I was trading options, that was 2 trades per option contract, one to open and one to close. And if I do that multiple times a day, I might spend $200 just in fees,
Mm-hmm.
which is annoying
Right.
because then you
Because
got
you
to make
could
that on top of your
now
profit
invest 200, and now you can invest that $200 and make
right
like
back in,
that money, yeah, right back in.
right back in.
So
And that's
you
exactly
touched on
what I do.
something, you touched on something that I think is also important to consider. It's like, okay, again, speaking personally, now that I've begun to do some of this, it's understanding what to do with it once it's there. You know, for me, I have my own goals. Property ownership is something that I've been a part of that I think is important. You know, real estate is important. But you know, when how do you live off of it, right? That's I think. Well, let me backtrack. If that's my goal to be able to live off of what I have invested over time, which is sounds more of like a retirement goal than anything. But I really think that I feel very strongly that people should have the ability to retire earlier because I think that what that does is it gives them the opportunity to actually do something that they care about that potentially could be another business instead of having to work until they're 65 and then whatever life they have left, is preparing for the future generation, right? Or, so it's this weird thing where, and maybe it's because I also grew up in Greece and I see the different value that people place on how to live versus just wealth. And it's a cheaper place to live and there's a cultural aspect to it. But, chasing wealth throughout your life and then not being able to enjoy your life is one thing. But being able to go into it like with the understanding that, hey, I also want to enjoy my life. What do you do then? Do you leave it in there and live off the profits? Do you keep on reinvesting it? I mean, do you need a second source of income? I think this is another question that I find challenging because it's like, okay, now I've begun to see my money grow. Well, maybe I want to use all that in the short term in order to buy another piece of property. And that's okay. But is that the best move? I don't know. Is it the best move for me? Maybe, so I don't know.
For
That's kind of the
some,
question I
for
have.
someone who makes enough money that they can become an investor,
Hmm.
and then it becomes important for them to diversify their portfolio. So
Hmm.
you should own property.
Hmm.
It's like the best tangible asset that there is left.
Right. Right.
And you also should be responsible for how you want to live and die with your investing, right? So if you
Hmm.
want all of your money allocated into property, just know what you're doing. If the goal is to live off money down the road from your cash equity investments, and you choose not to own, say, rental property that you're
Hmm.
getting cash flow from, or you want to
Hmm.
stay in your house,
Hmm.
et cetera, then mathematically and historically, the best thing to do is to put money in. The safest thing to do being investing in a whole exchange or an index, like, or the entire stock market. You can buy shares of the entire stock
Hmm.
market
Hmm.
and never take it out. For whatever reason, mathematically, if you just hold rather than try to pick right before something's going to sell off and then get back in, then
Hmm.
over time, and the longest it's ever taken is 30 years in the history of the American stock market, but it has
Hmm.
taken 30 years before. But over time, you'll end up like eclipsing what if you just kind of win in and win out
Right. Right.
in value, and you'll more than double your money over
Hmm.
time. A lot of times people's money increases, say, like 10 or 20 fold. And not only does your money grow as the market grows, which tends to beat inflation, which is essential if you really do want to live down the road without working. You need to
Mm-hmm.
have that money that you're setting aside beat inflation.
Mm-hmm.
You also get things like dividends
Mm-hmm.
that get reinvested, as long as you check that box on your stuff, that get
Mm-hmm.
reinvested directly into the shares you hold, and the amount of stake you have in the market or in these companies grows over time as well.
Mm-hmm. Mm-hmm.
Then what happens when you get much older and you've never taken your money out of the stock market, say you're 30 years old and now you're 60, is
Mm-hmm.
you can, in fact, it's required by the government, in order for you to pull stuff like Social Security, if that's still around, you have to take a minimum of your money out of the market each year.
Right. Right.
But you can basically live off of the yearly gains that
Mm-hmm.
you get. Some people can live off just these dividend payments that come in out of some of
Right.
their holdings. But
Right.
that's mathematically how you would do it. Now, if what you want to do is not work, then you would have to actively manage your portfolio
Mm-hmm.
and work doing that. And
Right.
the way that works out is you do come in and out of positions in a way that you are consistently, like, I don't want to say ahead of, but you're anticipating the market. And you're also really good at seeing what sort of companies are going to have cycles for growth. And you
Mm-hmm.
find yourself consistently in these big newsworthy trades.
Mm-hmm.
And the only way that actually works out is if you do consistently see yourself beating the market year after year. My girlfriend and I
Mm-hmm.
talk about that all the time. Like, it doesn't make sense for me to do uh, stock market investing stuff if at some point I'm not beating the market, because then
Right.
you're better not doing all of that jazz and dedicating your time to creating cash flow through
Right.
some
Through
other
some other
work.
means.
Right.
Mm-hmm.
And just letting it stay and just holding. And if you
Mm-hmm.
can, consistently just putting money in no matter
Mm-hmm.
what the market's doing. That's another piece of that math. For whatever reason, the way it plays out is it is it's historically been better for you to just put some money in each month, whether the
Mm-hmm.
market's doing great or poorly,
Mm-hmm.
than trying to wait for it to go way down.
Mm-hmm. Yeah.
Um, and
And
that
that's, I
that
think,
hurts my brain, but that is a statistic.
well, and I also know you as a friend too, and I know that you have your brain is very much geared for attention to detail. And I think for a lot of people, unfortunately, I'll even group myself in this, is that we want the fast track. We want, like, okay, tell me what to do and I'll do it. And I think that just a little bit of education will allow you to say, hey, if that's how you're approaching this, like you said, put it in, don't touch it, don't try to beat the market. And then at some point in the future, if you're consistent about it, it's gonna
You'll
work
have a
in your
bunch of dough.
favor.
Yeah.
Yeah. Yeah. And I think that,
But you
it
can't,
becomes this.
not to cut you off, but just an
No, that's all good.
asterisk to that, you
Hmm.
can't go with one of these like services like a T.
Right.
Rowe Price or a, a Merrill Lynch, where you've got like
Hmm.
this money guy.
Right.
Now
Because
I'm
they'll
not,
take your money.
yeah, and there are other got like hedge funds and people and big money can invest with people who they beat the market every year, and they do, but they don't. You can't just sign up for that kind of thing.
Right.
So
Right.
you can't do that. You've actually got to be investing like into the market, not investing into
Hmm.
somebody who says they're investing. Thank you.
Hmm.
Please continue.
No, 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 that makes sense. I just, I think that investing can be such a loaded, it can be such a loaded thing because it is something that inherently, I think, like you said, seemed unapproachable until recently. I mean, Robinhood came out what, 5 years ago, 4 years ago, maybe more than that.
I
I don't
think
know,
six or
but
seven, but
yeah.
it was so unapproachable, at least within my bubble that I'd lived. It just didn't seem like
Hmm.
something that I would maybe ever know what it was. And that seemed kind of
Right.
boring.
Right.
And
Yeah.
probably a lot of people think it is boring still.
Yeah, and listen, I mean, like for me, it's hard to just wrap my head around what the best is. Like for me, it's decision making, right? Like anything else, I
Paralysis of
think,
analysis.
right, and I think that boring is a cheap, it's a cheap response to what the real underlying thing is: fear. Like you said, paralysis of analysis. It's I get X amount of money coming in. I got all my bills to pay. Like you mean to tell me I got to take even a little bit more and invest that. Oh, I'm going to buy a PS5 instead of thinking, okay, with that $600, right? I can make more money and get more long-term pleasure than I can with the PS5. And I'm only using the PS5 because even that, unfortunately, as an adult, I'll say full transparency, like when you're making purchasing choices now, that's how I think about it, and I think that's how people should think about it. We what is the short-term gratification? And you touched on it with like your analogy of like going out and buying shots. Not to say that people shouldn't enjoy their lives and like buy things that bring them joy and give them pleasure or entertainment, especially now when we're locked up.
Right. Like
But
I'll buy some shots when I get out of
yeah,
this motherfucker.
100%. And I'll buy a nice TV to watch all my Netflix because I'm stuck at home, and that's
Right.
fine. You know,
Right.
I mean, even now, all of us, I mean, look at your setup, which is dope, right? And all of
Thanks.
us have like these crazy setups now because everybody's had to find ways, or at least I should say, a lot of people have had to find ways how to work from home, right? So there is an investment in equipment that's necessary. Um, but at some point, you also have to think about like, all right, what if you have a pipe dream? I think it shouldn't just be a pipe dream. I think there should be at least some mental gymnastics in place of saying like, how do I get there? You know, because what's the point then? I don't know. That's me. I know other people have way more struggles than I do and are starting from a much larger deficit than myself. But I'm just saying, there are things that, and this is a whole another conversation, not just about investing, but there are things that just should be taught to kids that are not taught. The value of the dollar is one of it. How to save is another. How to invest is another.
Right. How to
And
practically do these skills. We don't get a lot
right,
of practical skills in school.
no, you don't. And what you're told instead is that like the only way to do that is by pursuing certain uh like fast tracks is the only way, like get rich quick schemes, all these things where unfortunately some people are very lucky and that happens for them. Other people, you know don't, and it will never happen. um and other people, there are no outlets, there's no educational outlet. So I think that's also another thing for people who are thinking about investing, why it seems so daunting. And I think you're a really great example of somebody self-taught saying, hey, it's not as daunting as you think it should be. It just takes work, just like anything else. It just takes
An-
work.
Another actionable digital solution is this program called Acorn.
Yep.
And Acorn, if you're willing to spend a little time, I think that there are better things to do than Acorn. But if you don't want to
hmm
spend any time at all, I think it just rounds up your dollars on your debit
It
card.
does. Yeah. And you can set your rounding up, which is
And then
really
it
nice.
and then it just
Yeah.
does automated, similar to a Vanguard or a Wealthfront, but
hmm
a little more basic, but it just does
hmm
automated investing and over time. And that's something you can do right away.
Right.
I'm not a fiduciary, nor do I really want to be, but for someone who doesn't do any investing, if I could just like throw one shotgun approach that people could go with, and that would be to set up one of those accounts,
hmm
learn a little bit, and then at some point buy a stock.
hmm
Just buy something you like, and don't have all of your money in that stock. Have your money in your conservative, taking care of it for you investment account. So don't care what happens with that money, right?
hmm
Just look at it as a night out on the
hmm
town. It just That's going to be it, or a night in Vegas. You're willing to lose it. Just put it down and just enjoy it. If you've ever played fantasy football, you notice you enjoy watching the actual games a little more when you've got a player in.
Right.
And you and I can we have this in common. We both believe in some form at some point of cryptocurrency.
Mm-hmm.
And when you believe in something, but you don't necessarily have the means to make it happen, like I'm not a computer programmer, I'm not
Mm-hmm.
decentralizing blockchain anytime soon.
Right. Right.
but but I do believe that it solves some like existential problems that we're dealing with.
Mm-hmm.
And so it feels really great to have my money invested not only to diversify my portfolio, but short of that, feels good to put down a little money on something that I want to see happen
Mm-hmm.
and know that
Yeah.
I can affect and get rewarded for it. And then it becomes a little more engaging as it has a great day and
Mm-hmm.
I'm able to text my friends that also believe in the crypto and
Mm-hmm.
we're all making money together and it feels, it's an experience outside of just making it about trying to make enough money to retire one day.
Mm-hmm.
And after just putting some money down on a stock or some cryptocurrency and having a little bit of money invested, then just see what happens.
Right.
then
Well,
then
it's
make
about
your own
improvement,
decisions.
right? I mean, look,
Yes.
I think it's if you approach it the same way that you approach waking up in the morning and you doing yoga and eating well for 1 day, 2 days, 3 days, it aggregates, it grows, right? The positive choices that you make and the way you communicate with people and your life choices, they have a way of like growing and improving your experience overall, right? Like, I know that you are a big person, of positive mental attitude and like kind of like affirmations and like talking about like and believing, positive self-taught and challenging yourself physically, doing jujitsu and your interests are varied, but at the core of all of them is what self-improvement, right?
Yeah, at the core of it is all the negative self-talk
Well, yeah, that's
that
actually
that
really
I
what it is.
yeah, that I'll never let win.
Yep, yep, no, 100%. And I think that yeah, it's true because, you know, I know a lot of people who are successful who I also know look in the mirror and like will say some horrible things to themselves,
Right?
myself included.
Right?
But then they'll say, you know what? I'm gonna beat that, and I think there's something healthy to it, honestly. Like I think love a big part of loving yourself is being brutally honest with yourself, even if it's not true. I don't know how else to say it. It's like sometimes everything that you think about yourself negatively might not even be true at all, but if it motivates you to improve yourself, I think it's positive.
And that's
And
another thing investing provides for people.
yeah,
It's similar to a fist fight without those consequences
right.
in that you know where you stand,
Mm-hmm.
right? You
Mm-hmm.
know 5 years later what your decision making really did for you,
Mm-hmm.
good or bad, right?
Yeah.
If you're a trader and not an investor and you're looking to make the money on a daily basis in certain ways, like you can lose a lot of money and you can't argue that somebody got the wrong impression or something like that. You just
Right.
fucking
Right.
lost. You're just
Yeah.
wrong because
Right.
the market doesn't lie.
Yeah.
These prices on these stocks go up and down,
Mm-hmm.
and you can't argue with it.
Right.
The P&L talks.
Well, I hate to draw, not hate. As you were saying that, I'm drawing the analogy of losing being good, right? And obviously, you don't want to
It's
lose,
but
but
it's important, right? It's important to know I'm wrong a lot. I say all these things with all this
yeah,
conviction, but I'm just
right.
wrong. If you're able to see that for yourself, right?
Well,
If you're able to have that
considering,
understanding of your activities.
right. And considering the repercussions of what have transpired just this past week, and I don't mean to just turn it into a political conversation, but, when you and I talk, we do
Well,
draw
there,
parallels,
yeah, and
you know,
it's affected. Like you got to watch the news if you,
right.
yeah,
But you think about people who, we live in a country where either you win or you lose, even in politics. And it takes special people to be able to say, okay, I lost, you know, and it, when you deny the ability to celebrate and winning, and when you deny the ability to try to improve yourself and losing, I think it becomes a really slippery slope. because then it's all about denial. Um, and dude, that's just a very simplified version of what the fuck has been happening. Let's be honest. But I think losing is really good. I mean, I think it's really, really good. I think it's the worst also, but it ends up being good for you if you are able to take those lessons. So I think bringing it back to investing, experimentation is also a good thing, at least from what I've learned in my very basic kind of, like you said, see what happens. It's all about taking a risk and accepting the responsibility for the risk. And that's really what it is. And you either say, hey, I know that I can accept the responsibility for a small risk in, let's say, the guise of money, or I can accept the responsibility for a big risk. But if I win, I get a good result. If I lose, well, back to the drawing board, but maybe I can pivot. And ultimately, even in my profession of like making assumptions about how things are going to operate, like designing an app, let's say, and then having to test it with real people, sometimes your hypotheses are wrong, but then that's a great thing to learn because then you can improve an experience. So I don't know, kind of went off on a tangent there, but
No, you're right. There's a piece of, for the other end of the spectrum, people who are afraid of success. They
mm-hmm,
become comfortable where they're at, and they're afraid for a lot of different reasons of
mm-hmm,
moving up. And
mm-hmm,
when you do commit to saving in an investing format on a regular basis, you're putting out into the universe, I'm gonna be comfortable someday, or I'm gonna pay X or Y
right,
off, or like these things are
right,
gonna happen. And that can be scary for people, but realize like the waves or repercussions of that energy.
mm-hmm,
And doing that is a representation of turning that energy into momentum towards making those goals happen.
right,
And that's something that, I have student debt still, and
mm-hmm,
that debt many times has had control over my mind.
mm-hmm,
And getting involved directly in money has done nothing but bring the control back to me over that debt.
mm-hmm,
Whereas when I was just practicing, and hoping enough people walked into my door with pain, with suffering,
mm-hmm,
the relationship was much different. So
mm-hmm.
that kind of empowerment has had waves for me, and I know it does for other people.
Yeah, I also think, like, there's something to be said too about developing a psychology around taking that control back. A lot of
Yes.
people don't even realize that that's the case. And I think that it would be a great ideology of this country and in general the way that we interact with our friends. That's a big way that I believe, like, supporting your friends in their endeavors, is only going to benefit you, and not in a selfish way. Like, it's only going to be benefiting to everybody if people succeed. Yeah, you can't succeed. It's not in a vacuum. There's not going to be 100% success. But if you surround yourself with the right kind of people who
Mm.
will be able to support you in that, whatever it is, I mean, like, we use jujitsu analogies all the time, man. Like, what are your training partners really doing? They're helping you get better. You're helping them get better. It doesn't matter if you're rolling with a white belt and you're a black belt. That white belt might do something. They might have an experience of wrestling or something. They might do something that you're not prepared for. You learn something. If you close yourself off to that, I think then you become somebody who is blind, and that then that's a surefire way of not being able to see opportunity in the future. My own personal belief, but I think it's true. You have to kind of help mold your friends, mold your loved ones, and yourself in the same way by support. And that support can be harsh. You and I have had some real conversations in the past. And I think that's what makes good friendships too, is having to have hard conversations. I think a lot of people are scared to have real talk. Mm,
I choose to have people around me that hold me to a high standard.
yeah, yeah. It's just like investing in the market. You got to invest in your friends, man.
Hell yeah. Did we
Yeah.
did we how did we do with the list? Did we get through it?
Yeah, we got through a lot of it. I mean, I
We
think
did a
we
solid
t-
hour right there
yeah, no, that was good.
of
That was good.
investing.
Yeah, yeah, I like it a lot. I mean, I think it's important to like ask questions. It's the other thing. People are scared to ask questions. Like there's so many that I have, and we can have other conversations about it. But I just think that as you learn more, you have
Well,
more questions.
maybe we'll do a part two, but
Yeah.
I feel like we talked about stuff that would be helpful to people. Hopefully it was a
Hmm.
little helpful for you.
It was. I
And
took some good notes.
if somebody listens to this and gives it a shot, they probably got enough info today for
Yeah.
it, it to not melt their mind.
Yeah. Exactly. Yeah. I mean, I'll tell
Cool.
you just as a summary. I had never really considered the difference between like putting my money in a Vanguard versus like doing what I've been doing in Robinhood or
Hmm.
even in Coinbase.
Hmm.
And I had done some stuff with Acorns, but it's also good to know that you can adjust the speed at which you really want to be
Yes.
invested.
Yeah.
And that's pretty powerful,
And
to walk away with.
what you have right now on your little Robinhood most likely is you basically have a Vanguard fund
Hmm.
with
Yeah, I'd say it's similar.
if you've
Yeah.
got triple Q and
Hmm.
you've got like a Tesla or something like
Tesla.
that.
Hmm. Hmm.
That's yeah.
Yeah.
So
Hmm.
you've done that. And if you add a little more to triple Q, you'll like
Right.
anytime you add to that, you'll be taking volatility out of your stock growth.
Hmm. Hmm.
And anytime you don't add, you're you're removing risk from if the stocks go down, right?
Right.
You're
Right.
just holding cash.
Yeah, which is good too. Yeah,
It's
I
good when
mean,
it goes down and you happen to not do something that day, right?
right,
Yeah.
right.
That
Yeah. But I think also what's nice is about the at least kind of the overview that you gave, like there are certain systems here that you don't need that oversight of somebody like you who enjoys to trade and who is constantly speculating, because
right.
that's pretty powerful too, because some people have three kids and a job and all that stuff.
They
They just
can't.
want to know, hey, I'm putting my money somewhere where it will grow, even if it's a small amount, even if it's a small amount of money. Ultimately, I know 20 years down the line, it's going to be more than it was when I started, you know?
Right.
So
Or
that's
5 or
pretty
10.
powerful. Exactly. Yeah.
Thank you,
Yeah.
dude. I'm going to press
Yeah.
stop
No,
on
this was
this
good.
thing.
All right.